Now let us move on to Nifty index analysis. Futures. Let us start with futures. So this is the Singapore exchange price. It shows that SGX price is now trading at it's a 10 minutes delayed price at 10,728. So where the market closed yesterday, okay, our market closed somewhere here, okay, and after that what happened in the international market, maybe Singapore exchange, a bit of consolidation, and it went till 7,060, a drop and staying. So this gives you a fair idea that this 7,060 is going to be a selling point for today on seeing the late price action after our market closing in the Singapore exchange. So with this information, let's go to our NSE chart. What you saw was Singapore exchange Nifty index futures chart. So what happened yesterday? Now let us see what happened. Say the same thing happened. We expected the same price action. Right after the opening, it went up, hit and came down, tested, and it gave you, because our focus is purely on day trading, it went till 10,820. Finally it had a drop and closed here that. So today is an expiry day. Okay, we have a weekly expiry in the options contract. So we need to have that in mind before doing something. Today you can expect, like what we had seen, you can expect some price to open somewhere near 10,720. So what is this 10,720? This is not a very easy level for trading. When you see the last 2 days price action, and this maybe on Monday the price opened with some gap above 10,060, 10,660, and the price tested here. It gave a bounce back. Again it had a test. Since the price is going to open somewhere here, we should expect there is some sort of bounce back. Okay, and this is the mid range in the last 2 days. So when you compare that with the amount of volumes where the price would have traded, so this zone will be the area where you would have got some good amount of volumes also. So what we can do today, it's a difficult zone for trading, but one thing is very clear. Based on the trend, if you try to correlate based on trends, we should fairly stay on the buying side, which means that right after the opening we had drawn various trend path. Okay, all these are support and resistance line, but very effective support and resistance line. Okay, so wait for the price at least to come and test this blue line or this orange line, then go for buying. If you are going to miss, then 10,660 is the other zone where you can go for buying, expecting the market to move up. This is the first possibility. Because why we want to have this possibility? If you see the overall outlook, look, this 10,600 is not a very easy level. It is a very key zone. Okay, 10,600 is a very key zone. So if the price is going to stay below 10,600, so somebody is not happy. Who is not happy? Buyers are not happy. So they want to keep the price above 10,600 so that this buying can reach near 11,000. So 11,200 is the expectation for the market for this month. Okay, so if you ask about the expectations in short term, this is the expectation. But if the price is coming down below 10,600, this becomes very difficult. Okay, so taking all these chances, so what you can do, this zone is going to be the buying zone, which means that somewhere within this zone you can go for buying by placing stop at 10,650, and you can go for buying expecting the price to move up. This is one way. Since I mentioned that today is the weekly expiry, so many will be trading in on the expiry contract. Many will be focusing on positioning themselves for buying less value premium. Okay, so the premiums will be cheap today. So many traders who love to trade in the weekly expiry, I will tell you one thing, whatever the premium amount you are getting, maybe less premium or cheap premium or high premium, the only thing is the market should show some decent directional move. You should get some decent directional move in order for your premium to gain its value. So if for assume that if the market is going to open somewhere here and the price is going to swing within 40 points today, what will happen to your cheap premium? It will decay. Obviously it should decay. Okay, so have that in mind. The only thing what you need to think is, if you want to pick some low premium in the options contract, you need to pick the low and high. Maybe if you think that the market is going for swing, so I'm going to enlarge the scale. If you think that the market is going for buying today, you need to visualize what will be the point from where the market will give you a maximum swing. I see that this zone, if the price is coming and hitting this zone, then it can go to a maximum range, maybe near the yesterday's high, so that the premium value will increase. This is one way where you will be staying along with the trend, and things, or some few things are positive on your side. Okay, so what you need to do, wait for the right after the opening, the price is dropping down, wait for the price to come to a low, go for some out of money options where the premium will be somewhere near 6 to 10 rupees, where you can go for buying. And if the market is going to show you some decent swing, then you are going to make a big return when you compare with the investments. Okay, that is one possibility. You cannot rule out selling also. Okay, you cannot rule out selling, because we had seen a selling here and a selling here. The same thing happened yesterday, so you cannot rule out the possibility. What you can do, two ways. The market on the buying side, from this position it should move up, and on the selling side from 10,760 it should drop. These are the two areas where the market, if at all you are going to get a very big swing, these two things should happen. So what you can do, one, to be on the safer side, you can buy, if the price is coming here, you can buy some call option worth ₹7 rupees. Okay, what you can do, when the price is going to approach this zone, what you can do, you can buy a put with a premium of 7 rupees. So what this gives you, this gives you a certain advantage. What advantage? Even if you get this swing, you make some profit, or if you get this swing, you make some profit. But if at all the market is going to consolidate and close somewhere without any swing, obviously whatever strategy you place with a lesser premium, you are going to fail. So that is the objective for options contract. If somebody is going to take advantage of the weekly options, you should have this in mind and frame your strategies accordingly. So you should, the weekly trading in options, when you are expecting a directional move, is something that the underlying asset should move. So you should pick some lows and highs. These are the 2 points we feel the market. Obviously certain unforeseen incidents, like without our expectation, sometimes the market can drop down from the opening, and these are all beyond our expectation. We can predict the market to certain extents based on the available inputs we have, but if something is not going to happen, which we are not expecting, this is of course the market, we need to deal with it. So but what we feel, you can stay positive on buying. So CE call option, buying some, if the price is dropping somewhere here, you can go for buying. If you want to stay with the futures also, you can do the same thing. So now what we need to do, let's go back and see the option chain. So like I said, so if the price is dropping somewhere near the 10,700 or 10,660, go and put some out of money options. Now today after the market opening, all these premiums we cannot predict this last day how the premiums will open. It goes crazy. So all these things are understandable. What we are going to do, if at all you don't want to participate in this weekly option, it is good that you can go to the you can go to the next contract next week. You can select 10,750. Assume that you don't want to trade in this time decay and it hurts, you feel that that is not necessary. Go for 10,750 strike. Okay, since the price is expected to open somewhere near 10,720, this 10,700 will be the at the money option. The next 10,750. Let us see the 10,750 chart. Okay, let us see 10,750 chart. This is the 10,750 strike call option. So what should happen here? To a certain extent it will open somewhere near 128 or 130. Okay, wait for the price to drop somewhere within this 120 or 110. Go for buying by placing some 20 point stop, expecting you to get some 20 points. Why? So it is, so if you see the chart, you'll get my point. So in the last 2 days, it had acted, this particular zone had acted as a support and pushed the price here, and now the price is staying here. It will open somewhere here. So wait for the price to drop, buy, then you can expect the market to move up. So this is 10,750 CE, buy somewhere near 122, 125, stop near 100 to 95. So this should be one area where you can focus. So I hope I had cleared 2 doubts. One is option expiry. If you are not interested in the expiring contract, you can take the other side also. You can move to the next contract. It depends upon individuals. Some few may be willing to take some risk, few may not. They don't want this thrill, they want to consider every day as the same day. Then you can move to the next contract. So what's happening in Bank Nifty? Yesterday you could see the difference between Nifty and Bank Nifty. Yesterday both the Nifty and Bank Nifty opened with a gap, and Bank Nifty showed a very positive direction, but Nifty after the opening came down and tested a low, and you could see Bank Nifty maintained its momentum, created a very new high and dropped and closed near somewhere near the average opening, but Nifty closed much lower. So this says that today you can expect Bank Nifty to open somewhere near the same zone or a little bit lower. Okay, so what will obviously happen? So this is the trend path we had projected. Okay, this is the trend path. Now the price is here. One, it will test this and move up, or test this 2 zones to show some sort of buying. So you can expect some sort of a drop in Bank Nifty so that it can correct itself. The same thing is good. See, if you are trying to do the option expiry series in Bank Nifty. So okay, so this 22,400, if the price is going to drop here, this 22,400 can give you the maximum range for buying. Okay, at least from 22,400 till 22,600 you can go for buying. Okay, but if the price is going to open somewhere, if the price is you need to visualize this. See, if you are going to buy at 22,600, so there are chances. What are the possible chances? Suddenly the market is going to repeat the same price action what happened yesterday. I don't think that is possible. Okay, so you need to put you need to visualize that where you will get the maximum swing, and I don't think staying on the selling side will not give you much advantage today. So that is means if you buy a low premium of PE put option, but try to wait for the price to give a drop, and then you can go for buying. Maybe 22,400 or 22,000 will be the best price where you can stick on or stay on to the buying side. Okay, so we have trend path and trend projection. You can use it. This price should come and test this as per our expectation and move up, or it should come to the lower band and then it should test it. So that's all we have for today. With this, we are coming to the end of these pre-open discussions.